Strategies like these become really rewarding if you really have nerves of steel and you execute your plan flawlessly. Hi everybody, welcome to the video. In this video, we're gonna talk about what the heck is 1-1-2 strategy, which every trader must know. Let's learn every single thing about this. What the heck is 1-1-2? I'm gonna explain you how to make this strategy. After this, just making it is just 30%. We're gonna talk about adjustments. We're gonna go more deeper when I'm gonna tell you when is the ideal time to do strategies like this, the negative aspects of it. We're gonna talk about the positive aspects of it. As always, you have to watch the video till the very end if you really want to learn everything about this. So first, let's cover how to make a 1-1-2. So here we are on an option simulator, very familiar. I've selected the expiry, which is approximately 40 days out. Then what do we have to do? You see, this is the delta column. We have to select the delta, the second last column, right? Now here we have to find a strike which is approximately trading at 25 delta. We look forward to long this strike on the put side. Once we do this, the next step naturally is to short a put which is trading approximately 20 delta. Short this. So we short this then. After this, what do we do? Short two puts now, which is trading at approximately 15 delta. So we go to around 16.64 roughly and we select it and we sell two of it. As you can see, 1-1-2. When you do something like this, your payoff will look something like this, which you can see on your screen right now. We have long the put, the deltas I have already told you, then we short it and then we double short it. So it becomes 1-1-2. Now few interesting things are happening over here which you must keep an attention to. Number one, your probability of profit is extremely high, which is coming to be approximately 85%. I'm going to go more deeper. I'm going to tell you other parts as well, other moving parts. What do you see? One thing is really striking is that usually in iron flies or butterflies, you see the peak profit is hardly anyone get it. But here what you see, the peak profit, which is approximately 10,300, that means 11% profit in approximately 1.5 months, which turns out to be a monthly ROI approximately 6.57%. Wherein if market just keep on going in one direction or if it just sustains here, it's not much of an issue because we look forward to make approximately 5.3% of an ROI. If market sustains over here and if market don't hit a peak profit, which turns out to be approximately 3.4% of an ROI approximately. Now here, what do you see? The peak profit range is quite wide. So roughly 300-400 points wide range when you do something like this. Now, strategy like this give a pretty decent ROI, but the most important point is when exactly one need to do this. Because if market sustains here, we do understand that the probability is really high, and plus because you bought the put, so your chances of making money is really high, but we simply cannot just trade it out of random. So I have opened a nifty daily chart for you. This is one of those strategies which is a good replacement for a naked short put because your range is really high plus your peak profit is increasing. Suppose if Nifty starts to go down after some consolidation. So here I have mentioned the support zone, and as you can see, as you know, any index in the world, if you trade American markets, Indian markets, any other country, you find that support on the index is taken very seriously, unlike penny stocks. So here what you see is that once, twice, thrice, 4 times, if somebody do something like this, 1-1-2 strategy near the support, it comes to be very rewarding. So timing becomes extremely important. Now the main question is, should one do a 1-1-2 on the put or should one do 1-1-2 on the call side? What is my take? I'm going to tell you that. Also, I'm going to tell you about the exits of it. So one thing about 1-1-2 is what I must tell you. We're going to discuss a bit about the negative part here, is that we do not want a market to come crashing, breaking all supports and come really far out down. We may have bought the put, but this put is only active and only efficient if there is some kind of consolidation before any kind of fast move which comes on the downside. So this is something a trader needs to be a little careful about. Also, suppose if market starts to go down very fast, now three things a person can do. Point number one is that he do absolutely nothing, which is slightly more riskier because your probability of profit is really high. So high chances that 85% chances that may market go down and then market start to reverse because all the big news is already factored in. If you think like this, then holding on to a trade is really nice strategy, because what happens is as soon as option seller comes into any kind of danger, he look forward to cover. And what do we find? That as soon as he cover his position, market start to go up, and then he realize if instead of booking the losses on the put, if we just play the probability game really nicely, this is going to test your patience. If something like this you can do, then point number one is for you. Second thing which a trader can do is that a trader can look forward to adjust it. Now, how to adjust it is quite simple. I'm going to tell you more about it later on in the video. Is that you see this put which we have shorted as soon as market moves very fast. This put is more troublesome versus this. So what a trader can do, suppose this 155 become probably 210. So he's incurring approximately 60 point loss approximately. So he can book this put and come down to probably 23,000 put and sell it. This is called simply rolling down, not in time, rolling down in strike. So this is the second thing which a trader definitely can do. The third thing which a trader can do is if market suppose starts to go down very fast on him, he can select a trigger price. For example, as soon as market comes below 23,961 or something like this, I'm just picking random price. As soon as market comes below this, I will be completely exiting my trade. It does not matter if the trade is in positive or is in negative. So this is about the negative part about it. Let's talk about the positive points of it. Now you see here, you sold a put which is so far out. Now, if market sustains here or if it market go up, it is showing you a profit of 5,385 on a margin blocked of approximately 93%, which comes out to be approximately 5% ROI very easily. Now to make a 5% ROI, note this point which I'm telling you, that you do not need to hold on to the trade for the entire month. You are selling puts which is approximately 20 or 15 delta. These puts really go down very fast, really like a magic. So within a week, 10 days, 12 days, out of the 5.5% profit which you see, it immediately gonna remove at least 50% of it. Remember that you have to manage your risk in strategy like this. I'm gonna throw in more light on this. Now let's discuss more things about this. Time for your favorite VIP points: capital management and exit and adjustments. Now this is not one of those channels where we only talk about the good parts. The idea is to give you all 360 degree. Now capital management, it becomes very crucial in strategy like this because these are capital guzzling strategies. It require higher level of capital, 1 lakh, and when margin requirement can also shoot up, then may probably 2 lakh, probably more. So it's not wise to keep entire capital in strategy like this, especially when the risk on the downside is completely undefined. Number one. Number two, your exits, your control over your adjustment planning becomes really important in this. Why? Because booking profit is very easy, but when things go slightly off, then you should be absolutely ruthless with your trade. Either you're cutting your position, either you're playing the probability of 80%. So define yourself as a trader. If you think that you have the potential to hold on to the trade and you want to play the probability game, then play the probability game. Do not just shift your planning right in the middle. Do not trade like amateurs, because these kind of strategies become really effective if you stick to the plan. If you are a trader who know the adjustment and you have the flair to do adjustment if Nifty go against you, then you stick to it. Make sure that you don't have greed, because strategy like these are highly rewarding, provided that 112 you play better than anybody else. Now, one more point which is very important is 112 better to do on the upside. Now, people who I trained, they know very well that on the upside when they do, it's much effective. Why? Because there are a couple of reasons, a lot of reasons. One of the reasons is that market doesn't go shoot up really fast if there is no event. So holding on to trade becomes much more easier, right? When the last time you saw a 500 point or 300 point gap up without any news or any event. So that is something important. Now, the most important point is, can you trade stock options? right? Suppose stock options result is there for any blue chip company. Strategies like 1-1-2 become a really effective because end of the day, this is a ratio of 1-1-2, and you can play around with the ratio. I've given you the delta, which I probably like to use, which I use in index when it's near the support. So when you trade stock options near the result, basically what are you playing? You're playing a IV crush game. So this is definitely a good alternative to doing a short straddle or a naked short strangle, which is really bad way to trade. This is much better because you can do certain things which really improves on your trading. It's all about doing things better. It's all about having a proper concrete plan in doing this business. The best part is that you can trade it from your mobile phone. You just need the method, the technique, how to do it. That's what it takes actually. That's why I say hit and trial way of trading one must completely avoid. You can elevate your game, you can learn the craft in record time. Trading becomes really low stress when you have better, superior techniques, when you have the adjustments, when you have absolute crystal clear plan ready right in front of your eyes. Alright guys, so that's it for today. I'm sure you must have learned a lot. So give it a like, do subscribe, let YouTube know that you're interested in content like this. Alright, thanks for watching. I wish you all the very best. And like I always say, you are going to do so well in trading. You will surprise everyone. I wish you all the best. Bye.